The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Welcome to another edition of Zacks Rank Buy. I am Brian Boland, and I am the aggressive growth stock strategist here at Zacks. And today I'm all about the home. We're going home. We're focusing in on the home. And I'm starting this chart off from my friends at 4X Factory. 4X Factory. I think you can see it right there. 4xfactory.com. Boy, they have some wonderful data charts. This is publicly available information, but they really put it together and make it very useful. So here we have the new home sales data that came out on January 26th. And, outside from this, blurt here, there has been a pretty good trend line, of new home sales trending higher, right? Just like that. You can see that line. I know you can. Most recent quarter, though, big upside surprise here. As you can see, oh man, was that ugly. Get rid of that. Try it like that. There's your big surprise. 811 when 759 was expected. And prior last two, times there was misses there. The dot would be the expectation. The blue line would be the reality. So that's where that's at. So home sales trending higher. So why are home sales trending higher? And why are new home sales trending higher? Well, people know that interest rates are probably moving up soon. So if you're going to buy that house, now is that time. Now is that time to be buying that house. And that's the general idea here. So what happens when you buy a house? You buy new furniture. I don't know if your significant other has ever, bought a house and decided, no, you're off the hook. We'll just use all the old furniture along with this new house. I'm going to tell you right now that almost never happens. So if it happens for you, that's great, but it is highly unlikely. So Ethan Allen Interiors, Zacks rank #1 strong buy. ETD is the ticker. They changed their name, their ticker symbol from ETH, and ETH is that cryptocurrency, Ethereum, very popular. And ETD would get lost in the shuffle. So the CEO did a great move there by changing that out. So I applaud them for that. That was excellent self-awareness there on how things are running these days. All right, so value score stronger than the growth score. Are you kidding? But this is all about the home. We're doing this one. This is almost like a video just on the home, and why everything's good. So we don't have the greatest of growth here, but we're expecting some good growth. So let's move ahead and take a look at what we always look at here. We'll start with the earnings history. A beat, and a beat. That is pretty good. That gives us a 12% positive earnings surprise. But obviously, it's the idea is that, okay, now we see that the interest rates are moving higher. Maybe people are starting to buy that house, get in there a little bit ahead of the game before the rush to buy these houses comes in. So let's take a look at the estimates here. Up a penny, starting to move. Down a penny, unfortunate. But for the full fiscal year, which ends in end of June, we see up 18 cents. That's a strong move, right? So that is telling you right there that what we're talking about is happening. Next year, up 13 cents. A little good with a little bit of bad. Now let's jump over to the valuation, and this is where you really got to love it. 7.7 times forward earnings multiple, 1.7 times book value. Investors are super interested. Very close to my 1.0 times price to sales. I want to see that number at 1. And good growth. We saw 16% in the last quarter. We didn't even check to see what is the expected growth rate for next quarter. We'll go back. Look at this. For the current year, we're looking at 15% top line growth next year. And we're only halfway through. So we're still in the growth mode for this. And next year is slowing down to just about break even on top. But I'm not certain that we're going to see that. But all right, we're going. Am I going the wrong way? Yeah, I was. All right, so the next thing here is margins. We see 8.7 to 10 to 10 and a half. You know, that is what we want to see. So when we're growing sales and growing margins, we're going to be growing EPS. What happens when we grow sales and margins and EPS? We get a stock that that looks like this, but I think we, we looked at the last few quarters, and that, there's that kind of dip here. I mean, there has been a little bit of softness of late in the market, but boy, ever since that pandemic, it has just been, people focusing in on the home, run up, pull back. Now I'm expecting this sort of move because, as you can see, here are the earnings estimates. They're moving this way. They're trending it higher. So I want to keep Ethan Allen Furniture, ETD. It's a strong buy. It's a Zacks ranked #1. I want to keep that one on your radar screen. All right, next up is a little different angle on the you're at home sort of stuff, but it's BECN Roofing Supply. BECN is the ticker. It's a Zacks ranked #2. It's a buy. It's got a B for growth and an A for value. Boy, I feel like I'm doing Tracy's videos here with these A for values, but I'm doing a thematic thing, so I got to stick with it. It was a good idea in my head, and therefore it's a good idea on paper. Oh boy, did Brian not? I did. What are we doing here? We go Control Tab. That's what we do. Okay, so beat, big, massive beat. So this is skewed by this, but we take this out. We're looking at roughly a 20% beat over the last couple quarters when we take out that big skew quarter. Take a look at the estimates. What are the estimates? We're moving up this quarter 2 cents. That's nice. Holding steady at 42 right here. But for the full year, we go 481 to 504. That's what I like to see. And then this is a bump of the nickel here for next year. Next year's a long way away. Next fiscal year is a long way away. So that's that. So how about the growth? What do we got for growth? They're gonna call this pretty small growth on the roofing sector here. 6.6, 3.2 for next year. So is that the growth we want to see? No, not necessarily. But again, we've got an awesome valuation here. 10 point. Whoa, brother. Whoa, let's get rid of that. 10.6 on the forward earnings multiple. 2.1 on the price to book, and price to sales. Yeah, we saw a contraction last quarter. And boy, we 5 to 5.5 on margins, and then an NA. That's too bad about that NA. The idea here, somewhat growth and somewhat, is this stock really didn't take the beating. Pandemic crash, and then straight up, and then just a little bit down. I guess we're in that 60 range, come back to that 50 range. But here we are, and the estimates are still going up. Now, a roofing name. So when you buy a new house, you're not going to be, putting on a new roof because it just went on. But new home builders do need roofs. They need to put those on, and they don't always do it themselves. They sometimes contract that out. BECN is sometimes doing that. So I've been doing a lot of research on roofing names lately. I'm in a much lower population density area in Florida as compared to Chicago. But I am seeing more work on roofs around here than I did in my time in Chicago. And that's kind of crazy, but it is true. It might be a cycle of the weather, and the roofs don't last as long here. But boy, oh boy, you talk about protecting your investment, which you have to do. So 20% of all roofing is brand new roofs. 80% is what they would call re-roofing. I got to imagine with all these people buying their homes and buying their first-time homes, you're going to continue to see this up. This is a longer-term play, and I'm working on a much bigger concept around this, but it's just getting started, but it's coming. It's coming soon. So those are my two big names for you to put on your aggressive growth radar screen. Not so much of aggressive growth, but it is a homey idea. All right, homies. That's it for me for this week. Be sure to join us next time when I when I look at two other stocks for your aggressive growth radar screen. And make sure you go to zacks.com/promo for all of our most recent promotions.